Very much welcome to GAC Presents How to Invest in Stock Market Part 1. Very much welcome to GAC Presents How to Invest in Stock Market Part 1. Friends, in previous session we saw how cash position of the company changed after a year of operation of the company in the market. Also we saw that how various components of the balance sheet of the company are going to change because of this 1 year operation of the company. In this session we are going to see how company's balance sheet at the beginning of next year is going to look like. Friends, thus we see that the financial position or the balance sheet of company of previous year and the financial performance of the company during the year, which is also called profit and loss account, gives us financial position or the balance sheet of the company for the next year. Now we see that on the concluding day of 31st December 2016 or the beginning of 1st January 2017, how the financial position of our fictious company or the balance sheet of our company GAC looks like. We see an equity head in this balance sheet where two subheads are there, share capital and reserves and surpluses. The share capital is the original equity amount invested in the company, that is 8,000 rupees. This reserves and surpluses is the net income earned during last year, which shareholders of the company decided to take further as reinvestment in the company for development and further projects of the company, thus giving us a total equity of 9,960 rupees. This was the liability part of the company which company owed to its shareholders. Now we come to other liabilities. We see long-term liability of debt to have been amortized to 6,300 rupees. This calculation we have already seen earlier in this video. The current liability of payables, we had maintained the same very position of payables equal to 2,000 rupees, thus giving us a total liability of 8,300 rupees. And thus this liability coupled with the liability company owed to the shareholder, giving us total liabilities equal to 18,260 rupees. Now we come to asset part of the company. We have already depreciated properties, plant and equipments of the company by 1,000 rupees, thus recording the value of property, plant and equipment of the company for this year, beginning of this year, as 9,000 rupees. We had exhausted previous year's bought inventory for manufacturing of our finished goods, and the very last day we bought inventory worth 2,000 rupees, that we have recorded it here. We have already calculated that 5,260 rupees is the cash position that company have maintained at the beginning of this year. We had seen that previous years out of 10,000 revenue, company earned 8,000 revenue as cash and 2,000 revenue as credit sales, which has been recorded here for this year at 2,000 rupees, thus giving us a total assets of 18,260 rupees. Again we see that our equation of balance sheet is balanced here. Total assets equals to total liabilities of 18,260 rupees. Thus we also see that in due course of time, due period of 1 year, the company from a 17,000 rupees company have grown to be a company of 18,260 rupees, thus creating value for the shareholders. So friends, we conclude our sessions today. In next session, we are going to see how cash flow statement is created. If you like this session, do subscribe to our channel, like and share its videos. This will motivate us keep creating such videos. Thank you very much.